Elf stock has been absolutely crazy over the past couple of years. They've had crazy PE ratios, they've had crazy earnings and revenue growth. They've had a bunch of crazy things happening with acquisitions and with tariffs and everything. I'm gonna be breaking that down for you guys today. And then, of course, I'll be deciding if I want to own it or not. Elf has had a crazy couple of years. Back in 2023, they've been kind of starting with growing. They've been having a ton of growth, expansion into different markets. The Elf line, for case you don't know, Elf is a beauty and cosmetics company, so they do a lot of makeup and other cosmetic type products. And so they've been really growing, really hitting the market. They've had a ton of growth and a ton of success. In 2023, they acquired Natrium, so they've been doing a little bit of acquisitions. That's not their only one, but in 2023, they really started to take off. The stock really took off, and then into 2024, I think it got a little overdone. But then it started to wrap back down, and then into 2025, there was, of course, the tariffs that hit. So that really caused a lot of negative sentiment towards the company and other companies in the industry, and a lot of pushback towards consumers. And so, kind of just trying to gauge that out. And so that's been kind of interesting to see. Into 2025, though, they did do a big acquisition with Haley Beaver's Road Collection. So that's really been a big, strong part for them and is a lot of their future growth going forward. So we'll have to break that down a little bit too when we get into the model. But yeah, I've been owning it for a while, and so it's been down 80% from its lows, and like just recently, and then also it's still been down from its way high, and so there's plenty of room I think for it to grow. But I'm going to be modeling it out into the future couple of years to see if I think it's going to be worth it. So I've already read through the 10K. They have a pretty healthy income statement. The balance sheet looks pretty fine. Really, the main numbers that have been sticking out have just been from those acquisitions, so nothing crazy. But keeping an eye on things, keeping an eye on tariffs, keeping an eye on margins. I saw the 63% from the SG&A and the net sales, and I'm just trying to figure out kind of what's their margins and how do those margins compete against other companies. So I compared it to Estee Lauder, and they're about similar. So that's been pretty good to see that they're at least competing and if not outperforming some of their competitors. So that's been interesting to see. But I'm going to be jumping into the earnings call and seeing if I want to keep going with it. So earnings calls shed a lot more light into kind of what's been going on in the past couple of months, half a year. The biggest thing you can kind of I was able to figure out why there was this big change going on here. The main reason, number one, is they had expected sales growth at only like 12 to 14%, but then you had the big jump up to 18 to 20%. So that big jump is kind of why you were able to see it jump from down in the 50s up to almost 100 again. That's why you had that 80% increase. So big jump there, and I mean that's good if you're because I'm holding it, but it's also it does add more concern because it's like how well can they manage and gauge what's going on? How long will the road and the Naturium and the elf skin and elf hair, how long are those going to continue to grow? Got some more light with that, even answering those questions just now in the earnings calls. So one of the big things is they are number one in Generation Alpha and Generation Z and the Millennials. So each three of the younger generations are all kind of covered or number one priority for Elf. And so that's been kind of great. And that adds more long term reassurance than it does short term. Because if I think about short term, I'm seeing those consumers be more into trends and stuff, which Elf has done a great job of leading into, but that can also be dangerous as a shareholder. But in terms of the longer term, it also shows that they do have a good grasp on the younger generations. And so as time moves on, they'll be able to grab a bigger bit of that pie, so to speak. A bit more just takes on what's been going on with the industry. I know I'll talk about that more on the actual industry page, but really just getting a peek into where it is. There's been plenty of growth, plenty of ability for them to grow too. The industry as a whole is growing. They are in both the natural side, right? So just skin, not just makeup, but then also skincare. So that can also hedge against potential. Oh, the whole industry is moving into more of a natural than a makeup side of things, and so they're well positioned for both pieces to move. And the Road brand has really been growing for them as well. So that's been really interesting to see. They're still keeping around that gross margin from before. I know they switched it up to that 18 to 20%, but that margin's still going to kind of stay the same. And so that'll be pretty similar. But yeah, I'm excited to see what's going on with the management once I get that figured out. And so I'll come back to you when I got that. Honestly, not too much to talk about with the management team. They've been there for quite a while. They've done well. They're paid accordingly. So just kind of keeping that in mind for the model, but nothing too crazy. Wanted to comment to you guys about the group. They're doing a little bit more purchasing than selling. So keeping that in mind as I'm going forward. I know they talked a little bit about it during the earnings call, but really I think there's just a lot of growth potential just in general. They have plenty of foreign growth that they can be doing, and they've been, entering into these different markets, and they still have plenty of growth within. They said they're doing 20% target, and that's 5 years ahead, and the other ones are only at like 10% still, and so there's going to be a big jump there too, and so there's plenty of growth all around. So I'm not really worried about them hitting growth, but in terms of trying to model it out, I do think there's going to be a big difference between the bull case and my bear case. So that'll be kind of interesting to see as I hit the model here in just a second. I did want to let you guys know that I'll be doing a 30 stocks in 30 days challenge. This is the first one in that challenge. So make sure to subscribe if you want to see those, and I'll have them linked if there's a playlist going for those. So, all right. So I just finished up the model. Just want to say first, this is not financial advice. And then, of course, also, I wanted to let you guys know that they do their reporting a little bit differently. So you're going to see the 2027 up here. That's really just pretty much 2026, but ends one quarter into 2027, so end of March. And so just kind of keeping that in mind, but same thing as I normally do. As you can see, there's a big discrepancy between, or big difference between the bull case and the bear case. A lot of that really just comes down to how well they're going to be able to perform and continue. So I'll keep that in mind when you're trying to figure out if you want to own it or not. And I'll show you a little bit later here too how changing some of those numbers can affect the rest of the model. As for margins, I really just kind of see them staying the same. It might increase a little bit, they might decrease a little bit too. So just kind of keep an eye on that. As for SG&A, I kind of have that slowly decreasing, right? So I'm expecting sales to kind of stay the same, but your general and administrative, those kind of think of them as more of like a stationary price more than a increasing or as a percent. So just slowly decreasing those down as it goes. But if all of a sudden they are cutting a rut, then you'll see a lot more. But then also keep in mind too that you're going to have higher general and administrative expenses, especially when the company's doing really well because there's going to be extra stock based compensation. Getting into tax rates, I have them mapped out to increase or decrease off of kind of what they're projecting for this year. A bit of that is just comes down to how much or which of the foreign countries, how high those tax rates are. So if they enter into a lot of countries that have lower tax rates, you're going to see a lower percent or that percent slightly decrease a little bit. And if you see it increase, you'll see it the other way. So keeping that in mind as well. Then, of course, the EPS and stuff. And another reminder that's not financial advice, just kind of showing you guys kind of what's going through my mind when I'm thinking about if I want to own a stock or not and what I'm wanting to do. So, right now, kind of in the bull case, it is kind of a little bit more of a hold to buy, just kind of, but in the base case, it is more of a hold or sell. And then obviously, the bear case isn't liking it as much. I'm going to quickly show you kind of what happens here. Say I move all these to 30%, change all these to 30% here, and then come back down and say even change this to 3%. So that's they're doing extremely well, right? Their revenue's growing at 30% instead of that 24%. It's not really decreasing towards the end too, so that'd be quite spectacular. But again, we don't really know what's going to happen with the industry, so just kind of showing you a different map and you kind of see what would happen. And then also on top of that, if they're making a ton of money and they don't need to spend as much, you could also see them doing a little bit more of their share buybacks that they've mentioned in their earnings report too. So they still have plenty of money to do that. So, but if that happens, then all of a sudden it could be a really good position to be in. And so trying to gauge, how much of that I'm really wanting to deal. And so that's kind of been interesting and fun to try to map out and figure out. So let me know what you guys do and what you guys have, if you guys are buying it or if you guys are holding off, or you guys were lucky enough to get in or smart enough, I guess, to get in when it was down at 50 and have gained 80% in the last month or two. So let me know. So hopefully this brought you some knowledge. And so yeah, take care, guys.